Hey, morning everyone. Welcome back to Morning Cuppa. Right. So, the S&P 500 will inch up slightly, but failed to cross this 6,950 level due to the bond yield rose higher after the CPI inflation report came in slightly. I would say sticky, right? Which showing that the inflation is enough falling uh, that fast. So, which also made the investors nervous about the buying at top. However, I think the index stayed in uh, positive or in green because of the tech stocks, named like Nvidia, AMD, Micron, right, Avago as well, tracking on the TSMC blow earnings, which confirmed the global demand for the AI chips is still exploding. So stay tuned and we'll listen to Meng later on what he got to comment about the tech sector. Right. So expect a volatile session today as the bank earnings to kick off, right? So if the bank warns about the bad loans, I think the 60 uh 6,950 points resistance level will likely hold. Uh, send will send us back to the support lower, right? So okay, if you look at the China A50 futures, well, yesterday it dropped to 15,347 points on yesterday's session as the space race trade imploded. So I think the satellite index also went lower below 10% after the state media warned about the irrational exuberance, right? So trapping the retail investors who chase the rally earlier this week. So I think sentiment was also battered by the Trip.com, which crashed after the regulator uh, uh, launch a surprise antitrust investigation, which also dragging down the other perform. Uh, I mean the economy stocks like Meituan. So despite the TSMC strong earnings, which also trying to lift the semicon uh, space, right? So for the A50 futures, expect the expect it to test lower at this uptrend line level, which probably around something 300 support today. And I think the market also is spoke by the return of the so-called regulatory risk, which also somewhere around the margin rules, the antitrust thingy, right? So I think investors will likely to stay cash heavy over the weekend for this week, right? So if you look at the WTI crude oil futures, well, it dropped below the psychological of $60 level on yesterday's session as the dollar index dollar index surged to a 2-week high following the sticky CPI as well, triggering an automatic uh, sell off to the commodities, right? So I think the selling intensify as the update. Uh, I think updated um weather models show that the incoming winter storm will be wilder than expected, causing traders to remove the supply freeze risk premium, right? So um I think following yesterday's positive gains and also the uh breakout setup, so we change our negative to positive trading bias and expect the price to test the major support, right, at 58 at 65 resistance level in the coming session, right? So for the Malaysia market, well, the market rose higher on yesterday's session to close at 1716 points as the capital rotated from the construction to tech, following the TSMC earnings, right, which also confirmed the massive AI chip demand. So I think the index was also further lifted by the Genting Malaysia, Genting Berhad, right, which also rallied after the report saying that, I mean, news that Chinese tourist booking for the upcoming New Year have hit um, to a high record, signaling a massive first quarter for the casino operator. So expect uh, the index, the KLCI, FBM KLCI index to trend higher today. Well, at least to hit or to propel towards the 1720 points level today. And I think the market is in a healthy rotation. So yeah, the idea is always when the one sector rests, well, another rises, right? So this also uh, is a good sign, or a bullish, a true sign in a bullish market. So do expect the same for the FKLI during this positive bullish market. So yeah, this is our watch list for today. We highlighted some of the tech names that you can take a look as well. So for our Malaysia trading stocks for today, we have Bermas Auto, which is auto, auto company, right? Which is the Mazda distributor. So the stock has breakout higher yesterday at the 80 cent level on a strong volume. So with that, we expect the momentum to keep bullish or uptrend, right? And the stock able to propel higher to test the next resistance at this 86 cent level, followed by the 92 cent level. So if the stock to clear below the 74 cent support, this could reverse the course and also trend lower, trending below this 21-day moving average. Also, next we have Pile. So the stock is experiencing a pending breakout at this 29 cent level. So if the stock to maintain its recent bullish momentum and able to climb higher above this 29 cent level, the first resistance is at 33 cent, followed by 37 cent level, and do watch out for the 25 cent support for any attempt of reversal. And lastly, for the FCPO, well, it tanked yesterday to close at somewhere 3980 ringgit, after the Indonesian government officially confirmed that it will not proceed with the B50 mandate, right? Sticking it to the B40 mandate, well, like what Lilian has explained yesterday, right? Removing millions of tons of expected demand from the market. So I think selling pressure intensified as well in the first the 15 days of export data, show a sign of slowing growth, forcing longs to liquidate its position to give away lower, right? So I think expect selling pressure to continue, potentially to test the 3,900 level today, with the B50 story is dead, right? And I think underpinned by the stock part, the higher stock part as well, right? So yeah, I'll stop here. Thanks everyone. Thanks for listening. Happy trading, and see you again. So I pass the floor to Meng. Thank you.
Thank you, Aiman. So next we'll have technology sector update. Basically, we are maintaining our always call in the sector, as we believe the strength in the both the logic and memory space, driven predominantly by the AI demand, should broaden into the other subsectors, reinforcing a firmer FY26 outlook. And this should be more than offsetting, the forex related softness, as we have seen, in the appreciations of ringgit against the USD. I think globally, if you look at semiconductor industry associations, they have actually revised its projections for the global semiconductor sales growth to about 26% year on year in 2026, supported by a broader-based recovery, not just purely on the logic and AI from the AI or the just memory side of things. Similarly, for equipment side, SEMI has also raised its forecast for the equipment sales to $145 billion in 2026, representing an about 9% year-on-year growth. Again, they are citing, both the front-end and back-end segments of the test equipment and assembly and packaging equipment will continue to grow, underpinned by the growing complexity and test requirements due to the accelerated adoptions of advanced and heterogeneous packaging. Now, this outlook is reinforced by a constructive from most management guidance across our local supply chain, with improving loadings into FY26 and various program wins from project transfer, as well as supply chain relocations. In fact, this is evident in broadly in line third quarter 25 sector earnings, as well as a sixth consecutive year-on-year revenue growth for this sector. Most players continue to exhibit firmer revenues as well as earnings trends supported by various factors, not limited to smartphone demand recovery. We have seen some replacement cycles for the ICT products, AI-driven upgrades, stronger server and peripheral demands, and on top of that, power management integrated circuit needs. For the different subsegments outlook, we break it down into four. I think the first one we're looking at entering support as well as the ATE segments. They should continue to record continued growth momentum into 2026, led by higher order book. These are tied to increasing semiconductor volumes as well as the complexities. I think for the OSATs, their positions for a sustained high level activity, although some of the recovery may vary by exposures or regions. EMS side, I think they are gaining tractions with orders recovery in fourth quarter and first quarter, with various new business prospects provided you have capacity readiness as well as capabilities to take in a lot of project transfers and relocations from various parts of the world. Meanwhile, the software and ICT firms stand to benefit from robust secular trend in digitalizations, cloud adoptions, cybersecurity, as well as IT refresh. Now, just like to highlight a couple of key risks to the sectors. I think first thing first, rising memory prices. We have seen the DRAM prices have up. It was up like 70% year on year. That may eventually cause a price increase to your electronic gadgets. You name it. In terms of smartphones, your PC, your tablets, and automobiles. That may potentially cause a slower demand later part of the year. The other key risk, of course, is on the forex, where we estimate the impact to earnings for every 1% change in the forex rate will be about 0.8% to 3% impact across the sectors, depending on the USD and also material exposures from the various players. Now, nonetheless, the rate cut cycle by the US Fed funds should continue to boost valuations and cushion the volatility from the forex, at least from the sentiment point of view. Now, in terms of valuation, I think the sector is currently trading at about 22 times 4P, which is below its 5-year means of 25 times, where versus a consensus earnings growth of more than 50% in FY26. We also note that the divergence of the Caltech index as well as the US Philadelphia semiconductor index appears to be unwarranted. While local supply chains may not be directly benefit, from the so-called, AI nor the logic boom, historical cycles do indicate that spillover effects tend to materialize with a lag, particularly, as the volume normalize and the mainstream, not, trickle down to the entire supply chain, as well as a broadening capex spending by, the players across the sector. For strategy, we now favor, the second liners of technology names. The small to mid-cap names will perhaps do better at current stage of the cycle, given, the more compelling risk-reward profile. A lot of the improving fundamentals have yet to be fully priced into the current share price. The big caps boys, may take another 1-2 quarters to show better numbers in order to justify the richer valuations. Hence, the playbook for now is to focus on these players. Topics, for the sectors, bigger boys, we are favoring MPI, basically to leverage on the semiconductor sector recovery. They do have a high, exposures to the server-related loadings. They're about 20% of the revenue. They do have a very diversified customer base. China is in Suzhou is doing very well. I think we are expecting the Ipoh side to catch up this year and contributing to better numbers from various program transfers. Now, CTOS Digital will be our pick for the domestic focus software and digital solutions players. Whereas for the smaller cap boys, we favor Coraza as well as the GHM consolidations. Both are expected to undergoing, explosive rebounds in earnings, backed by a robust revenue growth momentum and operating leverage gains. Maintain always on the sectors. I think that's all from me. I'll pass on to Adam.
All right. Good morning, everyone. So firstly, we have a company update for Kerjaya Prospek, which secured its first job for FY26 worth 201 million ringgit for a service apartment, 2 blocks of apartments in Damansara Damai for Kerjaya Prospek Property. So this latest job win of 201 million ringgit makes up 10% of our 2 billion ringgit job replenishment target for FY26. So moving forward, we think that Kerjaya Prospek could reach its 2 billion job replenishment target for FY26, given that there's potentially going to be around 500 million ringgit worth of projects coming from ENO Andaman Island. Given that 1 billion GDV is expected to be launched annually, then we've likely got maybe some potential jobs coming from the industrial side. That could be maybe 300 to 500 million ringgit. Then you've also got your infrastructure or potential reclamation jobs coming from ENO Andaman Island. And lastly, maybe a mixture of some third-party property projects in the Klang Valley. So, all in, we took the opportunity to make some tweaks to our to reflect the actual job replenishment target in FY25 worth 1.8 billion ringgit versus our initial target of 2 billion ringgit. So because of that, we toned down our earnings estimate slightly for FY25, 26, and 27 by 2%, 3%, and 1%. And as a result, we derived a lower target price of 3 ringgit and 35 cents from 3 ringgit and 45 cents previously. So, maintain buy on Kerjaya Prospek. So next is Binastra Corp ground checks, whereby we visited the Exim showroom last week in Plaza Pelangi, Johor, where there was a sizable footfall at the showroom. And they are currently showing 2 projects, which is the Asterias at Jalan Kebonte and the Causeway Square project at Jalan Lumba Kuda, which is very close to the Bukit Jaga RTS station. So Binastra has so far secured 400 plus million ringgit related to the Asterias and about 132 worth of filing works for the Causeway Square. So moving forward, we view that pipeline remains intact. In totality, looking at potential EXIM jobs in Johor, there's likely going to be about easily 1 billion plus of jobs coming from the upcoming launches from EXIM's project. And not to forget, EXIM has a land in New York hotel, so that should potentially be another project for development in the long run. And another key client, Maxim Global, also has or is developing a land in Taman Pelangi, Johor, which may yield about 800 million worth of potential jobs for Binastra. So in totality, Johor likely has another 2.7 billion worth of projects in Johor alone. And not to forget, they are still active in looking at other projects, namely your LSS, data centers, and sewage treatment plants. So maintained by with an unchanged target price of RM2.69 for Binastra. So that's all from me, everyone. Thank you for dialing in today. Have a good trading day and
Adam. Adam?
Oh,
Hi,
sorry.
everyone.
Oh my God, sorry, Vanessa. Yes. Okay,
No
sorry. I'd like to
problem.
pass on the floor to my other colleague, Vanessa. Sorry
Thank
for
you
that,
so much,
everyone.
Adam. All right. Hi, everyone. Morning. This is Vanessa from Warrants team. So we have 40 warrants that's actually expiring end of this month. Okay, so end of this month means 28 January. So I have 40 expiring warrants, so means that I cannot put everything in one slide. All right, the last trading date of all these warrants is actually on 26 January. All right, so this will be the last chance for you to trade. So how do you actually check on what is your warrants one of those that's expiring very soon? So you can definitely go to RHB Warrant website under expiry warrants, or you can just sort according to the expiry date under warrant search function. Okay, so I actually put on a few examples over here. All right, so maybe just to tell you like what are the situations, I mean what are the status like for some of the warrants. So actually I saw it I actually filter it, and actually I show on the moneyness of these warrants according to yesterday's closing price. All right, so yesterday's closing price, we actually see some of the warrants are already in the money. So for warrants that those are in the money, which means that the share price is currently higher than exercise price, then for the warrants holders, you'll be safer for now. All right, because for in the money warrants, it will be cash settled, which means you will get back some cash. However, for warrants that's out the money or at the money, which means that the share price is way lower than the exercise price for all call warrants, then you have there will be no cash settlement for all these warrants. All right, so how do you look at it is that you check on your warrants. All right, so see whether the exercise price of the warrants is actually lower or higher than the current share price. And I will share with you on the cash settlement formula next slide, so that you can know how to actually gauge whether you want to sell it now or you want to sell it later. Okay, so for example, SCG Berhad CC, Southern Cable Group Berhad call warrant CC, it's actually higher than the exercise price of RM40, so that it's in the money, and the current bid price is 27.5 cents. And if you want to sell it like today, for example, the price is about the same, then you can sell it directly in the market, either to someone else or either to the market maker following the price metrics. But if you want to wait for 28 January, then the price will be different, because the share price will move, and also we'll be using the 5 days closing average for all cash settlement on warrants. Right. So on the other hand, if you look at those warrants that's already out the money, a very good example will be GCB C23. GCB C23, we all know that the price actually is not very, it's hovering around like 70, 75 cents. All right, so the exercise price is RM1.54, right? So means that it's like way lower, and then it's out the money. So when it's out the money, you will see the bid price left with only half a cent. Half a cent, which means there's no more intrinsic value in these warrants, and then it left with time value only. Yeah, so if your view is that GCB is not going to recover like higher than RM1.54 in this span of 2 weeks time, or maybe about 10 days time, then you can actually have an option is that you can sell it for half a cent. All right, so if you want to wait until like cash settlement and then it's still out the money, then you will not be getting any cash back on this certain warrant. All right, so maybe I can mention a few more very I would say highly demanded warrants like Nadia Smart C5 is a speedmart warrant. So it's already pricing around like 53 cents right now. So I would say that if you want to sell it, then you can actually just take profit on that. But if you want to hold till the end of the day, then you will be getting cash settlement according to the formula later. All right, so I actually highlighted on Greatech C21 because yesterday Greatech actually did very well. Okay, the share price did very well. So it actually very close to the exercise price right now. So its exercise price is 1 ringgit 65 cents, while yesterday Greatech was around like 1 ringgit 64 cents. All right, so for warrants holder who are trading, it's fine if you are not holding on it. But then for some warrants holder that actually hold Greatech C21 from a very long time ago, and then finally have seen some gain in the warrant bid price, then you can actually consider to take profit because that's currently trading at 2 cents. But this was yesterday, so today we'll be waiting for the new price of Greatech. Okay, so cash settlement works like this. You have to use 5 days closing average, closing price, so you get the average of the mother share. So in the case of for these 40 warrants, right, that will be the expiry date on 28. So the 5 days is like 5 days before. So it's 21, 20, 21st, 22nd, 23rd, 26th, and 27th of January. And we are using closing price for that specific share instead of VWAP. So do note on that. And then you have to count on that, and then you know that, oh, it's already in the money. So you minus off using this calculation, which means that settlement price, you get all these 5 days divided by 5, minus off the exercise price, and then divide by the exercise ratio. So this will be the value of one warrant. So you see on your hand, you have how many warrants? Maybe you have like 100,000, then you just multiply by 100,000. Yeah, so that will be the approximate cash settlement that you will be getting back within 7 market days. All right, so you don't get it instantly, but you have to wait 7 days. All right, so look forward to today's market. So today I think Aiman also actually have mentioned about Burma's Auto, Bauto. Yesterday Bauto B Auto core warrants actually garnered very high interest from the public, all right? So from the investors, so we actually see very high trading volume in Bauto core warrants yesterday. All right, so I actually highlighted RHB Bauto C49. All right, the reason being is that, of course, it's issued by RHB, but secondly is that it's actually slightly in the money. So yesterday share price was around like 80 cents, while the exercise price is at 70 cents. So it's slightly in the money. So you actually saw that Bauto C49 started to gain intrinsic value. However, you have to be very careful because it will be expired on 26th February, so you have some time to trade. It will be good for those trading short term, like intraday trade or maybe a few days trade. That's fine because it's very sensitive at 2.5 ticks, while the effective gearing is giving you about 5 times. So we actually if you want to know like how much you'll be able to get, then you can use the price matrix. While if you look at the bid price of the warrant, like the warrant price directly, you will see that 6 cents. 6 cents is actually quite a sweet spot. It's not very expensive, like 10 cents or over 10 cents, but then it's not very cheap, like 2 cents, 3 cents. Because 2 cents, 3 cents, even though if you make money, you'll make a lot, but then in the case of the shares dropping, then you will actually experience quite a huge losses as well. So 6 cents is actually quite a sweet spot for warrants. I mean, in this case, Bauto C49 is actually quite a good pick for you if you are still bullish on Bauto shares. Okay, all right. So thank you so much for today. Finally, it's over. See you happy trading. All right. So we see you on Monday, 8 a.m. RHB Morning Cuppa at 8. Thank you very much.